Ladies and gentlemen of the crypto space, we're live on a Monday, October 31st at 11:36 a.m. We're going to do a macro Monday roundup. We're going to talk about a couple of things that I've adjusted or the way I'm thinking about my portfolio. And we'll start off with what I see that's interesting, a descending, broadening wedge on the Dow Jones Industrial Average. Now, obviously, everyone hears about the FANG stocks going into basically meltdown led by Meta. And I think that clearly you have the flows, the automatic flows, the 401ks, and so on and so forth, the money managers that need to invest in something. And there's flows into things that really shouldn't be getting flows. But that's what got us to where we are. That's not where we are. So we're at a place where those ultra large caps that were super duper hyperinflated are clearly coming back down to earth. But we're seeing like a individual stock pickers type of environment where the broader system is receiving capital inflows. Individual stocks, smaller companies, mining, so on and so forth. And that is indicative of, I would say, a healthy redistribution of capital. I think that's where really the best manifestation of a belt up phenomena would occur. It's not like Meta's going to all of a sudden go back to where it was. Who gives a shit? But you're going to see a lot of folks that are taking capital off the table from the large caps that are significantly depreciating. There's a lot of weakness. It's not a growth environment. It's not like there's cheap access to money with the higher rates. So you're seeing the opportunities emerge with the smaller companies that are really needed as systemically important, maybe manufacturing, domestic mining, so on and so forth, things that are being speculated on to be of significance to this country, the United States, actually doing something decent for a change and actually allocating capital in a reasonable, rational way for a change and not just cramming the capital more and more into the super highly inflated. It's not that Meta's bullshit, but it's the price point is bullshit. What are they doing for society? And yes, I don't want to diminish the meaningfulness of its products and services, but there's a great reason to appreciate and expect a significant capital rotation to other things that have systemic significance as well. And I think that's the best representation of the melt up we'll see. We'll see a lot of highly underperforming assets, smaller organizations that significantly start to outperform. And then clearly getting into further of a macroeconomic shit show, liquidity tightens, things that are on the verge of insolvency where there's zombies and they don't have enough cash flow to service their debt obligations, and maybe we see a bankruptcy run, and who knows what the hell occurs with this financial shit show that may emerge. I mean, obviously everything from a macro perspective is screaming uh, extreme tightening of conditions, and we know what happens when conditions tighten like this. Things start to break. You get insolvencies, you get the margin calls, the cascading liquidation events. We've all seen that in the crypto space, and it takes a lot longer for those types of conditions to emerge in the larger financial system because it's so fucking slow. But shit happens at warp speed in the crypto space, which is why we've seen these types of events, but they happen really quick. You see the liquidation cascades, and they happen really, really quick. And and it takes much longer for those conditions to get set up. Now, clearly, the liquidation cascades happen really, really quick in traditional finance as well, as we see in 2020. These are massive, massive capital destruction events, but the conditions necessary for these types of events to occur take a fair amount of time to brew and to really condense into the criticality needed to start to trigger these cascades. So this is a descending, broadening wedge right below the 50 SMA, which is a 50 SMA, 100 SMA bearish cross. It's not like a 50 SMA, 200 SMA bearish cross, which would be a death cross. So we're not even close to a death cross at this point. We'd have to go down a lot of points to get there, almost 1,000. And on the monthly, oof, I mean, we've never seen that. We don't even have a 200 SMA on the monthly on TradingView. Um, and this is just Dow Jones futures, but we saw a 50 SMA bounce, and usually this is where things like to bounce. Let's go over to SPX. We should get a bit more of a history. We should look at the Russell 2000, the NDX. But look, 50 SMA, 50 SMA, oh, not as much as I'd like to see. But the uptrend is still very much intact, especially with a 50 SMA bounce on the monthly. And oh, that's the NASDAQ 100. What's the Russell? Uh, Nothing special there. RTY futures. No. Yeah. Well, this goes back to no, very nice. All right. So this is whoa, look at that bullish engulfing. That's good to see on the monthly. So what a chart. Look at this bullshit volatility that'll drive you absolutely mad. You got a bullish engulfing followed by a shooting star, an inverted hammer, and a bullish engulfing. So the inverted hammer is somewhat, I mean, this is obviously a very small wick on it, but with the bullish engulfing, it's taken 2 months to potentially invalidate the directionality of the shooting star. We definitely need the breach through the 10 SMA above, and it would be reassuring to see the breach through the TWAP above. So now, the question becomes, is there a potential for the broader market to remain moderately healthy, considering the devastating reality of macroeconomic conditions? And I would say, sure. Why can't you have significant outperformance in portions of the economy while obviously super hyperinflated assets get completely annihilated, but systemically meaningful components of the financial system outperform? And that might manifest itself in these index funds, probably more so the Russell 2000 as compared to the more concentrated funds, especially like NASDAQ, which is predominantly FANG stocks at this point. And then that's what I would expect, especially during a melt up type of scenario. Now, obviously, everyone here is mostly interested in the crypto markets and how all of this shit plays into the crypto markets. And the easiest way to say how everything, the broader system, plays into the crypto markets is with regard to volatility. When volatility is low, capital tends to find a way to take some risk. Now, I want to look at the dollar. I want to look at the 10 year. So the 10-year looks to finally have found some decent resistance below the TWAP on the daily, which is a good sign. You want to see the sale of U.S. government debt securities, treasuries, start to stabilize. It's not good in any particular direction, but you want to see countries and individuals start to buy them. McElrath put out a great article yesterday regarding commercial banks and the nature and the composition of money, which I found very interesting. But there could be very well a meaningful capital rotation into 4% treasuries as compared to bank accounts. Who the hell keeps cash in a bank account when you got a 4% treasury uh, right in front of you? So that's quite interesting. So there's a potential large amount of cash available domestically in the U.S. That could potentially allocate to this, and you see significant downtrend of yields. Um, and I think that would be indicative of stabilization of the market in some regard. This is an unhealthy appreciation in any any imaginable way of looking at the chart. This would very much be well taken as a shooting star, as a top for yields. Now, on the dollar, obviously, that was just as bad of a run, a devastating run up the trend, though. And it looks like we're finally finding resistance. You see this very similar shooting star. In fact, this is a Tweezy top potentiality. The very big wick to the bottom thus far, and if you notice, the wick to the bottom was right off the TWAB on the weekly. Yep, look at that. Look at that. Isn't that wild? So we're not out of the woods with regard to potential volatility because the dollar potentially induces a variety of meaningful effects with regard to the buy and sell pressure on bonds. So we would see that in the 10-year, and all of that volatility either encourages or discourages capital to be applied to various risk markets. In my mind, I often think, what kind of capital is being applied to equity markets as compared to the crypto space? And I would think that it's a very different type of capital. You know, you got money managers, you got wealth managers for retired persons. They're not deploying capital to the crypto markets. So the crypto markets are inherently attracting a different type of risk sensitive capital. It's capital that's really prepared for that type of risk. So I think the crypto markets, in many regards, are much better suited for the volatility, which is interesting, especially the crypto space has never been really tested with a true systemic event on the scale of 2008. But there's a sense, in some regard, that it may actually be better suited to handle that kind of volatility. I mean, how many folks on the stream have not experienced the insane volatility of the crypto space? So the second you see it, you're like, all right, whoopee do. But if you see that volatility in the equities markets or the bond market, you're like, what's going on? Holy fuck. In the crypto space, we're like, all right, it's just Saturday. Saturday, a weekend, not even a weekday. Um, let's go some comments and I'll talk about what I did to the portfolio and what I'm thinking with regard to anything that I would potentially consider doing in the coming days, other than what I've actually done as of today. A little laggy today. Kaysen's in the house, Tapsy's in the house, Iran, a pleasure. Robert Shaw, catching a live stream for once. Good morning, Noah from North California, in the house. Beautiful day. No horns, no tail. Great to be on stream live and in living Noah. Mathis, Gearbox V2 is live. Very interesting. Leverage curve. Come on, that's got to be interesting in some regard. So I find it interesting. Do I deploy to interesting? Oh, probably not going to deploy to interesting. That doesn't mean I can't find it interesting. Um, so that's cool. That is meaningful. You want leverage. You want systems that actually function with very powerful, effective liquidation engines. That's great. So I find it very interesting. Critical Mass present. Dan's in the house. Raul, crypto bets. Any thoughts on Hedgic? Yeah, no interest. A lot of folks take on that kind of risk, and that's cool. And greater the risk, greater the return. And I just am not interested in that kind of position. Um, so, I mean, options, derivatives, this big business, GMX style, and there's a lot of stuff other than GMX that has significant potential. I mean, obviously, synthetics still has a huge amount of potential as a base layer implementation, which GMX is doing very well at, that we all obviously know about. Um, so that's cool. I'm the base layer, or you all know that. I like the infrastructure, I like the foundation. So, in many regards, a lot of the stuff that I talk about is very boring. It's risk adverse, it's passive, it's revenue oriented, it's really structured for maintainability, less work, less effort. You guys know that by now. So, I like the protocols, and I'll say it, I'll always say it. Doesn't mean I'm necessarily going to play with them. So, there's very a meaningful uh, position, or there's a meaningful use case for options and derivatives that attracts market actors and people get engaged, and this volume and all this cash flow that ends up all going through the forex markets. Yay. Ah, Dad, why exactly don't you like bearish versus bullish regarding the market? There's always directionality somewhere, sure, but I don't like it because it'll drive you nuts. Meaning, do you really care if it's bearish and bullish? That's a sentiment type of terminology. What I care about more so are the conditions conducive with actors taking risk. All right, fine. So fine, that'd be bullish. So what I don't like about the words is that they're short until what's funny, everyone always criticizes me for being too too philosophical, too wordy, too I talk in too much detail. And that's exactly what I'm doing with regard to what you're talking about, Dan. I don't like bearish because it's a summary. It's a summary of state. And I think it's just there's so much more to it. It's so rich and deep what a market is with all these components and all these important attributes and characteristics. So I hate the simplification of it. And it's what everyone says that I have an issue with. And what is he talking about? I don't understand him. And this is exactly that. I would rather hear someone say, "Oh, there's a huge amount of liquidity coming into the market, and all of a sudden, GDP is going up like mad in the U.S. and productivity is through the roof, and all these people have a huge amount of capital, and they're probably going to want to apply it to the crypto space." And that's basically the markets are bullish. So that's the that's the deal, Dan. I don't like it because I got issues with granularity and complexity, and I like to talk in way too much detail. I don't like simple. I make things much more complicated than they need to be, at least verbally, that is. One curious view. Good day, sir. It was a good weekend. Today's Halloween, so my daughters are off to school with costumes and stuff, so that's cool. Finally finishing up the floor. I'll probably get a picture on Twitter when the floor is finally done. Very invasive when you do work around the house. That's it's your personal home, it's your living space, your kitchen, your cooking, and especially when you have kids, and when everything is disrupted, it's very personal. It's like someone in your closet, someone's in your living room. It's an interesting thing working or improving home improvement. Um, anyway, I digress. I digress. Brian, a pleasure. Macro Monday. Danielle, only important regarding context of whether you deploy capital or not. Matters less in the long term if you think a protocol has legs. Maybe it bothers you because people flip based on the 1 minute chart. Yeah, that drives me nuts. Something either has long-term viability or it doesn't. And if it doesn't have long-term viability, the narrative has been invalidated. If it's been invalidated, it's irrelevant. You exit the position and you move on. And, you know, I know a couple of folks that are really, really good at deploying large amounts of capital. And if something gets invalidated, they pivot. And that's cool. And I would say, I've engaged like that. And it's easier to engage like that when markets are really bullish. Um, and it's not so easy to engage like that during these types of markets, bearish markets. So that comes back to what I often say is just wait for easy money mode. In easy money mode, yeah, sure, that type of engagement with markets works just fine. Some shit's hot, great. It's not, a day later, you pivot to something else. But when the markets are slow moving like this, no, who the hell wants to sit and babysit some shit? You want a position that you're comfortable with, that works, that makes sense going forward. Frax, what? So these are the things that I like to think about that give me peace of mind. So I have the optionality to step away from the machine and know that I make good choices. To know that the market's going to do what it's going to do, and I'm going to be like, all right, that's cool. Like I don't even have to look at the curve chart because I don't give a shit about the curve price. It's a purchase. It's done. I can't do anything. I can't sell it. I can buy more, but it's a purchase. So what do? I do is I look at the Warden. I look at the Warden to see how much my revenue is. 26% on liquidity. So I love this position, and I love what the Warden built. And it took a while for these boys at Palatine to catch on. But now they have 100% fill on everything. This is such a better interface than Vodium. It's such a better interface than the old school Bribe CRV from Andre. Um, this has the potential, I think, to really catch on in the coming months and years. I'm quite content with how this turned out. Now, obviously, many folks with VE curve don't have a position, and there's no availability. There's almost no availability here, so you can't vote if you wanted to. So when I voted, there was like 90% availability and everything. Nobody was really using it. So I guess that was my pivot. I didn't pivot with regard to a position change. I pivoted with regard to an opportune time to reallocate votes from Bribe v. Curve or Vodium over to here. And now this is where the action is. Now I'm very excited actually because of Liquidity. Liquidity's bonds are pulling in millions, millions. So with that kind of revenue and that kind of feedback mechanic that is deepening their liquidity, it's working, it's effective. So the only way to maintain that momentum is capital efficient liquidity financing. And the only way to do that is with renting votes. So I'm quite satisfied and relieved to see what looks like the conditions necessary for this particular incentive to just remain in perpetuity. They got to keep paying, especially with the bonds. They need the revenue on those LP positions to generate the money to pay for the bonds. Otherwise, if the revenue starts to dip and the bond revenue, because the bond revenue is the revenue from the LP positions, that revenue dips, bonds pay less, less people are engaging, more shallow liquidity, less depth. And that's not the direction they want to head. The way they want to head is more bonds, more revenue, more votes, more liquidity, more financed incentives. So that's growth. So I would like to see this remain, and it makes sense for it to remain, which means I have a nice, healthy source of income, which I speculate should be in perpetuity. There's no reason for it to come up. So obviously, Paladin, they're renting votes, and the other ones are renting votes, but there's all the reason in the world for Liquidity's vote rental to just they can't take it off. How do you can't take your foot off that gas pedal. You take your foot off that gas pedal. I just explained what happens with the bonds and it's all connected. So all the conditions are ripe for this particular vote incentive to just remain in perpetuity. Um, One curious view, everyone uses the word nuance for it. Yeah, nuance is a good word. Semantics, semantics. Joe, why does B&B get a bad rap? Well, BNB is completely centralized, meaning it's owned by Binance, and to such a degree that they literally turn it on and off. So it has a very similar wrap as compared to Solana. Not that Solana and FTX have a capacity to turn it on or off, but obviously if it goes down, they have a very coordinated network of validators. So it's not critically decentralized in any regard. But BNB is worse because that's literally Binance turns it off. They turn it off. That's it. You can turn it on or off. So that's why it gets a very bad rap. Um, yeah, it has good performance, but it's the old decentralization argument, and I just think it's a playground. It reminds of Phantom, Avalanche. I mean, sure, very different narrative to be told about the potential for the Phantom ecosystem versus the Avalanche ecosystem versus the Polygon ecosystem versus the BNB, the Binance chain. The narrative aside, what kind of projects are working on, and it's just very degenerate on Binance chain. There's a lot of bullshit that went on, and not, I mean, obviously that's gone on in every chain, but Binance chain, in my opinion, has certain overtones to it. Where's the quality? I don't, and that's obviously my opinion. That's just subjective. I've never really played around. I, you could do the same thing on all these chains. So then the old question always comes down to, mainnet and one of the roll-ups, Arbitrum, Optimism, or ZK Sync eventually. So what's the significance of all these Alt L1 chains in a world where you got Ethereum mainnet And you got roll-ups that are pennies per transaction that are actually cheaper than Binance Chain. Tapsy, no more summaries. No, I promise I will never stop talking in riddles and complexity and diving deep down the rabbit hole. It's a curse and a blessing simultaneously. Dan, the impressed with Messi's conviction plays. Well, he is very smart. You know, he has a capacity to pivot hard and hit something really hard. Uh, I've encountered many people in my life, and very impressed. Uh, uh, I don't know him personally like that, but we've talked much, and we have a private chat that we talk in, and we've had a couple of streams together, Taiki and whatnot, and I have a high opinion of what the way he thinks and the choices he makes and the actions he takes. Um, uh, and plus his personality is fun. So good guy. Could the issues with Abracadabra and Wonderland regarding their CDX locks affect the MIM3 curve LP on convex and subsequently the MIMPEG? Well, MIMPEG is pure arbitrage, and obviously curve facilitates a great degree of peg stability under extreme conditions, considering what they went through. So the better incentivize the liquidity, the more opportunity for arbitrage, and the A parameter, lower A parameter uh, f- effectively encourages better arbitrage, higher A parameter, and you get the better slippage rates, so on and so forth. You get the better capital efficiency. So um, there's a, there's things, and I think MIM and Abracadabra are very interesting. Um, so they have a lot of power. So Wonderland still has a lot of capital, and so does Abracadabra. CVX locks. So I mean, it just gives them power. They have treasury, they have capital, they have votes, they rent votes. Abracadabra rents votes. So MIM3 curve on convex, they have a capacity to finance a meaningful amount of liquidity. I think MIM's not going anywhere. I think MIM and Abracadabra is a significant CDP protocol that has its issues, has its complexities, had its drama, and I think they've managed well. And I don't think it's far from abandoned. I think it's an active development. It's just obviously in the background, but I think they're doing the best they can. And the fact that it has done what it's done and has survived, it has survived. So that's meaningful. What is this in regard to me having interest in a choice in a position? No, I'm not. I don't want exposure to anything like that right now. But as I said early in the stream, uh, that doesn't mean I don't have to not like something. So I have a good opinion. I've always had a good opinion of Danny, and especially the protocol and Squirrel and Merlin and a bunch of other folks on the team. I just didn't want exposure to the drama, but a good opinion of what they built. Um, it's not saying I'm interested in exposure. You took some positions last week. Do you think the worst has passed with regard to volatility to the downside? No. I think the potential volatility to the downside is paramount. Potentially the worst is very much yet to come. It's irrelevant. I think it's absolutely critical to have a portfolio under all conditions. The question becomes survivability. Because if you survive to the next cycle, that's all that matters. So, do you have enough cash? Do you have enough cash flow? Do you have a capacity to make a purchase, an optionality to take a position? Can you take some leverage? And that's one thing that I engaged with. I took my Ethereum and I opted for SFRX ETH, a staked Frax ETH position. And that is probably that's the most recent thing I did. I'm I like this position. I like what I see. I think when they get their gauges on curve and convex, and when they get the Frax gauges applied, I think the yield is going to draw significant Ethereum away from um, ST ETH as well as R ETH. And I think this is going to be a bit of an extravaganza, a bit of an event as it unfolds, because there's a lot of capital that are in those types of assets. So the rebalancing and the arbitrage, I think, is going to be quite ferocious. And this is coming. This is going to be a bit of an event, and I look forward to seeing it. And I think that 5 to 7% is going to be much higher. So obviously, whatever's not staked in SFRX ETH is not getting the the network emissions because they're going to be over there chasing the incentivized return. This is the ultimate passive position for staked Ethereum. SDETH, they don't have the firepower. Frax commandeers Curve vis-a-vis convex. It commands it. It is a controlling force, and that's something I saw for a long time. Is what Frax was building with Curve. That the synergy between the two is extraordinary. That Frax has a capacity to finance liquidity like frankly no other protocol. I mean, that's what we've known Curve has a capacity to do for quite some time. It's a capacity to finance capital efficient liquidity. And right now, of all crypto protocols in the entire crypto space, Frax has the greatest capacity to finance deep liquidity. That's power. They spend over $1 million a week on votes on Convex. And that's in addition to all their voting firepower with what they own. So that is very, very interesting. And I think this is going to be a bit of an event when this starts to unfold. Hey Noah, have you been using Osmosis? What's your thoughts on it? And its DEX and potential. I got a large Osmosis airdrop. It's worth nothing at this point, a couple $1,000s. I have uh, I have an Atom position that's years old, for like literally 250, $3 range, give or take. That's been staking this whole time. They pay a fortune in their inflation. I look forward to Cosmos 2.0. That's cool. I have a high opinion of the Cosmos hubs, specifically with regard to the integration into the BSN, that's a hot topic. I've talked about that before. Osmosis is cool. It's a DEX. It's obviously, IBC, and everything is cross blockchain on Cosmos and the Cosmos hubs. So it's not a concentrated position. It's a marginal position. So I have a high opinion of what's going on over there. That's about it. Joe, because it started as ETH knockoff and has a bad reputation for rugs and scams. Okay, Stephen, you nailed it on the head. It's primed to blow up. Yeah, it's hot. I mean, look what happened when uh, BSC took off. I mean, it exploded out of the gate. Binance Smart Chain was the first Alt L1 that really took off, and it exploded. So everything you said in your comment, Stephen, is on point. JJ, hope you've been doing well. I'm okay. A little bit of a sniffle today, but I'm okay. George, hey Cap, can you unstake SFRX ETH anytime with no fees except slippage? I don't know. Let's see. Yeah, it looks like it. Yeah, I got some 0.0007. That's cool. I mean, it looks like it's streaming. So yeah, apparently I could just remove my FRX ETH. So obviously I'm not getting my ETH back because that's that. I mean, this is just Frax. I love it. I am a fan of permanent locks. I'm a fan of CVXCRV. They build treasury. I am a fan of this. FRX ETH. You cannot get your ETH back. You could swap it in FRX ETH LPs if you want. Great. I'm sure that's where the incentives are going to flow. But I love that Frax is going to be building an ETH war chest using financed incentives, financed liquidity, financed capital efficient liquidity using their curve and convex war chest. That's crazy. That's a big deal. Permanent ETH lock from what I see, and I like that. If you want to swap for it, great. But to me, all that matters is you get in revenue. Check back in 5 years. Stephen, BNB is just the right amount of centralization for the speed and transaction cost. Sure, they say the same argument about Solana, so on and so forth. Joe, Stephen, DeFi is less interesting to me than other chains. Yeah, BNB. Yeah. Cohen has Velodrome. Yeah, betting CZ is most likely to bring DeFi mainstream with Pancake mainstream. I mean, listen, the whole argument for 2016 and 17 was when's it coming mainstream? When's the institutional money coming? Don't waste your time and effort. Watch the liquidity. That's the metric. You'll see whether it's going mainstream if liquidity significantly goes through the roof. So don't waste time looking. When's the adoption going to happen? Just look at the numbers. Look at the numbers, and the numbers are right here. Yeah, if you see all of a sudden this is at $1 trillion, you know some sort of adoption's going on, but as of right now, you still got a decrease in liquidity over time. Nice to see a little bit of bump. Positive peg, 1 day change, tethers up a bit, leveraged, leveraged euro dollar, leveraged digital euro dollar. CDP, collateralized debt position, minus 0.16% for the week. $150 billion in this emerging market that has had a capacity to capture these dollars in systems, financial systems that are attractive enough for people to continue to be risk on, considering how bearish the market is. I mean, if you compare this size of a market to where it started in late 2019, this is a market, an emerging market that has captured a huge amount of dollars, and that is an extraordinary achievement. There are countries on this planet that have less money than the amount of capital in DeFi right now. Flying Frog, is this like real ETH at same price? Well, it's staked ETH. It's like ST ETH or R ETH with Frax operating Ethereum nodes. So that's what FRX ETH is. So this is obviously interest from the network, and the network is the Ethereum network, and these are the blocks that produce incentive to stake, and that's what we talk about. It's what Ethereum is, what's proof of work, what's proof of stake, so on and so forth. That's what FRX ETH is. It's a liquid staking derivative. Can you stake or LP SFRX ETH? No, the SFRX ETH is a deposit. Now, maybe if Frax wants, you'd be able to borrow against it, because that's what Abracadabra does, borrow against deposit positions. Because typically, like Aave is collateral. You have to actually have a token to deposit to Aave so you could borrow against it. But with what Abracadabra's the Genbox or Sushi's Kashi or Tapioca with the Genbox too, you could use a deposit as collateral because you are depositing into the Genbox, the bento box, which is then depositing into the respective position. So at some point, I don't see why you can't have SFRX ETH as a collateral on the Fraxlend page, and that'd be very consistent with a feature and functionality that Abracadabra has, and Sushi has offered for some time at this point. Curve paying 8% on the money on Fraxlend. That's pretty cool to see. Um, Curious to see if they accept to share revenue from XR to VEFXS holders. I doubt it will come from SFRX ETH. VEFXS, I don't know. I'm just speculating and shooting from the hip. I think VEFXS, well, there is, I don't know. I think that comes from more like FRX ETH is an ETH deposit. So now Frax has treasury, and the VEFXS is revenue from, well, the Ethereum is staked. So I don't know. These are good questions. So they're building treasury, but that treasury is a liquid because it has to be in a node. So these are good questions. George, I remember DeFi summer of 2020. DeFi market cap was 1 billion. Yeah, now we're at 148 billion dollars in an absolute catastrophic macroeconomic backdrop. I don't know. I don't know. I think this market's hot. It's people will get hung up on how far we are down from the top and how much further it could go down. But where we were was at $1 billion worth of capital. Compare it to now, that is an extraordinary achievement of emerging market financial success. That's the deal, boys and girls. 32 people in the stream, 10 likes. We could do better. Monday, October 31st at 12:16 p.m. As always, thank you everyone for joining me. Tell everyone to subscribe. I can't help anyone if they don't listen to me. You know the deal, after party on Discord for the most rational community in the entire crypto space. I appreciate everyone in there more and more every day for the rational talk. And today is Monday, so we'll be back on Friday. I wish we could get back to Wednesdays, maybe towards the end of the year, but we'll be back on Friday this week. So I wish you all a good one. Be safe out there, be rational. I will see you next time. Peace.